Hello, and welcome to another episode of the Markets at a Glance series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So today, we'll be having quite an interesting session as we focus on the New York Open. So we'll be taking a very quick look at the markets, and that basically is created by the title, Markets at a Glance. So we want to take a quick sneak peek of what the current events happening in the markets right now, what's going to impact the markets as we enter the New York session. And of course, we'll be looking at technical analysis to try and understand the key market setups, key chart patterns, and potential market. So as always, this session is purely educational. It's not an investment advice. Neither is it a recommendation to trade. So you should always do your own analysis, do your own research, make your own decisions, and of course, practice proper risk management. So hello, Leonard. Thank you for joining the session. So once you join in, as usual, kindly comment in the live comment section, share your feedback, the questions that you may have, please type them there, and I'll be responding to that right away. So ahead of the New York session, we have had quite a number of news announcements, and this has had some impact in the markets. And of course, most of the major news for the day will be happening 30 minutes from now. So first things first, early in the morning, we had this news coming in from the UK, and this was the UK jobs data. So there was a surprise weakening or softening of the UK job market, where the 3-month count change came in at 11.7K. This was higher than the previous reading of 0.6K, but also lower than the expectation of 18.1K. So the average area earnings came in at 6.5%. So with a 6.5%, this was much weaker than the expectation of 6.8% and the previous reading of 7.2%, whereas the unemployment rate remained the same at 4.2%. So just a quick catch up, we always know that the key contributor to currency tends central banks time and time over again. So when central banks make decisions on interest rates, they tend to have a direct impact on the valuation of a currency. So in this case, we have been following the Bank of England, and we know that for the last 2 years, the Bank of England has been hiking interest rates in order to address high inflation. And as a result, it has basically strengthened the pound against other currencies. So in this case, we are looking at signs that may indicate that the Bank of England may go for rate cuts. And one of the signs or the fundamental factors the Bank of England has been observing is the interest rate, is the job market in the UK. So a very strong job market means that there's a low unemployment, there's increasing wages. Then in that case, it tends to be inflationary in an economy. But then if the unemployment is rising, there's an increasing number of people who are claiming for unemployment insurance. It basically means that there's a softening of the job market. Also, wage growth, when you see it decelerating, like we saw this morning, it basically means the job market is softening, and as a result, central bank may feel more comfortable cutting interest rates. And that's why we saw the pound weakening against a strong dollar. So later on, we had more data, including inflation data from the Eurozone. German final CPI increased by 0.1%. We had the ZEW Economic Sentiment Survey from Germany coming in at 15.2%, showing increased optimism within the Japan economy. And of course, for the Eurozone, there was a slight reduction from the previous reading of 23.0 down to 22.7. So going into the New York session, the main focus today will be on Canadian data. First, at 4:15 p.m., at the housing stats. I don't expect much of an impact in the markets as a result of the housing stats, but then a big impact in the markets is expected from the Canadian Consumer Price Index data, which is basically an indicator for inflation. So the expectation is that inflation may have jumped higher on the month of December, similar to what we saw happening in the US after the US had hit a 5-month low inflation rate of 3.1%, but then it later jumped higher to 3.4%. So today, the key focus is on Canadian inflation rate. So year over year, the previous reading was 3.1%, and the market estimates is 3.4%. So if we happen to see inflation being on the rise in the Canadian economy, it means that the central bank will not be comfortable going for rate cuts. So as a result, there is that expectation that interest rates might remain significantly high, and that tends to be positive for currency. So if we see a big spike happening in inflation rates, let's say from 3.1% to 3.4% or even higher, then that should be pretty positive for the Canadian dollar traders. And on the other hand, if inflation tends to remain low somewhat, maybe around 3.1% or even lower, then in that case, the Bank of Canada may feel comfortable cutting interest rates. And in that case, it should be negative for the Canadian dollar. So core inflation rate is expected to remain the same at 2.8% year over year. And on the month, the inflation rate is expected to have reduced by negative 0.8%. So that's the key data points that we will be observing in a few minutes. So besides that, we'll be looking at the New York Empire State Manufacturing Index, and this will be happening still at 4:30 p.m. Manufacturing conditions in New York are important since they are a leading indicator of the overall manufacturing conditions within the US. So when we see New York Empire State Manufacturing Index worsening from negative 14.5 to an even more negative number, then in that case, it should be negative for the dollar and negative for US equities. But then if there is an improvement to say -5 or even -9, then in that case, we should be expecting the dollar to strengthen, but also US equities to continue strengthening. So in addition to this, we'll be looking at a speech from Bank of England Governor Bailey, and the speech is expected at exactly 6 p.m. And of course, he'll be responding to a couple of questions, and if he shares hints about the Bank of England economic monetary policy, then in that case, those hints could cause some volatility in the markets. So those are the key highlights. That's what we're expecting. And of course, outside the economic calendar, last week, the SEC, or the Securities and Exchange Commission of the US, approved spot Bitcoin ETFs, which started trading on Friday, but they did not trade on Monday because it was a public holiday where Americans were celebrating the Martin Luther King Jr. Day. So the second day of trading of spot Bitcoin ETFs should be today. And as a result, we should be expecting to see increased volatility in all Bitcoin pairs. So that being said, now looking at the charts, there is a first observation of the dollar index, which managed to make an important break out of the range area that it had been trading for the better part of this year. So since the start of the year, we had a big spike on the very first day of trading, but then for the rest of the days up to today, we have seen the dollar index trading on a sideways momentum or a range. Today, early in the morning at the market open, the dollar index jumped higher, and since then it has been moving higher, and it has clearly broken out of this range and traded at levels around 103. And as a result of that, we have seen other currencies losing to the dollar. So among them is USD JPY. You can see how the dollar has been gaining against the Japanese yen. So it managed to cruise through our earlier target. The target was set in a previous session called Market Snapshot Series that happens every day at 11 a.m. So if you have not heard about this before, make sure to be attending the Market Snapshot Series. And this happens daily, Monday to Friday at 11 a.m. So for this particular session, Markets at a Glance, it happens once a week on Tuesday at 4 p.m. And of course, remember on Thursdays at 8 p.m., we have the Market Pulse series. So for Euro USD, we were targeting that the market would drop and eventually get to this support. So eventually, it managed to break below the support, retest the area, and continue moving downwards. So now, from the 4-hour chart, we expect to see some further downside momentum. And clearly, don't have a clean strike price that is nearby to use as a target. So this implies the possibility of the euro continuing to draw further downwards and potentially getting to 1.07 to 271. And this is quite a distance. So it's a price action movement that might take a whole week or even more. But then it's a clear change in direction, and we should be expecting to see some further downside momentum. So judging from the trend line here, you can see it has already been broken. So some further downside momentum is expected in USD. Of course, for pound USD, even after the announcement of the weak job market, we saw the big drop happening here in the morning, then a continuation to the support. And now from there, the market attempted a bounce. So if you look at the price action for the last couple of hours, there was this attempted bounce. Then we can see market attempting to push further downwards. So it seems likely that the market will continue pushing and forming newer lows. So as for USD CAD, which is what we just discussed on the expected news for the CPI in Canada, the market already hit this particular resistance. This area was previously acting as a support area. And now as the market got to the same area, you can see the price action reversing. So of course, we expect to see some good volatility arising from this. So if we happen to see the Canadian dollar strengthening as a result of rising inflation, then there's a good chance there should be a reversal of this particular trend. Maybe the market will go back to retest this area. So there's that potential that the market setup goes to the previous support and finds an important stable level around, this is 1.34414. But then if we happen to see the inflation subsiding, remaining around 3.1%, then the dollar could continue strengthening against the Canadian dollar and rally all the way up to 1.36177. So it seems likely that the inflation rose during the December holidays. And in this case, higher inflation would mean that the rates stay higher for longer. So in this case, a potential for the market moving downwards. So as I had mentioned earlier in the day, there's two possibilities here. One, strong inflation leading to a stronger Canadian dollar. So if the Canadian dollar is strong, we don't want to trade that with another strong currency. Because we've seen the dollar index has been pretty strong, so we don't want to pair the Canadian dollar with that. So you want to trade the Canadian dollar with a much weaker currency, for instance, the Japanese yen. So if the Canadian dollar was to strengthen, like it has been strengthening for the better part of the day, then further upside momentum is expected, and we could be seeing the market retesting this upper trend line here. So there's still a possibility that the CAD JPY currency pair eventually moves higher and takes some breather around 109.477. So there's that potential that the market keeps going up. So that will be the target once the news is announced. Perhaps if there's a huge discrepancy between the expectation and the actual outcome, then the market would be even higher. So technically, if the news strengthens the Canadian dollar, we buy Canadian JPY currency pair. Then if it happens to weaken, then we buy USD CAD currency pair. So that's the key highlight and expectation today. But then also it's important to notice the momentum happening in equities. So we have already seen the Nasdaq making a huge drop. Then later on in the afternoon, we have seen the market making a reversal where the equities are beginning to strengthen. So there is a good chance that this momentum here might change once we get into the New York session. So it doesn't seem at all likely that we will have a continuation of the bearish momentum. But then also, it seems like the market is just moving sideways. So we don't have that strong trend that we are used to observing in the Nasdaq. So with this in mind, then I expect the market to remain here within the two trend lines unless something fundamentally changes. So just a moment. So for the US 30 or the Dow Jones, we saw the market finding some very good support from here. So the analysis where we were expecting the market to close through this area and head lower to that $7,240 per share is no longer playable. The market is almost recovering on the losses it had made early in the morning. So in this case, it basically implies that we have entered another swing, and now the expectation is that the market continues recovering and pushes towards the upper trend line yet again. So for the US 500, or what we call the S&P 500, also we are seeing the market making a strong bounce in the last 2 hours, and now we are entering yet another swing where the market could be headed for a previous high. So as for Brent oil, the market continues to move even higher, but then we are back to a key level resistance area that we have been observing over time. And the expectation is that the market now starts to make a recovery. So in this case, a reversal. So if the market is unable to break this area, then the potential for short selling positions might become more interesting. So that's something to consider. And also for European equity indices, they have made a very impressive comeback with the French 40 index forming a very strong pin bar here, then taking about 2 hours before reversing and moving higher. And of course, for the Euro 50 index, it seems to be similar trend across the board. So a very strong pin bar, then followed by a struggle here, and then the market reversing direction. Of course, for the UK 100 or the FTSE 100, the market formed a similar pin bar and then immediately changed direction. So as we head into the New York session, I expect these European indices to be retracing backwards and recovering some of the losses that they had been making in the early hours of today's trading. So also a very important asset that we've been trading is gold. So we analyzed these yesterday and realized that the market was unable to form higher highs. And with a strong dollar rocking the markets, we saw the reversal prepping up. So we discussed these later on early in the morning, and we saw the market potentially moving downwards. And now the target we had set for gold at $2,033 per ounce has already been hit. And now if the momentum keeps pace and the market keeps dropping downwards, then an area to be observing would be the 2018. So 2018 seems like a nice target for gold. It's a previous low, so the momentum might continue crashing gold towards these levels. So if you enjoyed the profits from the analysis we did early this morning, then you should be observing this area here. And if there's signs that the market might continue selling, then a drop to 2018. But then it's also playable or tenable that the market might find support here. So you just have to observe the area first before making a trading decision. So hello, Mamo Pastor. I can see Richie, Zero, Willie, J Squad. Thank you guys for joining the session. So there's a good question here from Brian. Good afternoon. Please explain how the disruption of Suez Canal would lead to inflation. So the Suez Canal, as a part of the Red Sea, is a major trade route for goods moving to Europe as well as the US. So whenever we have disruption of shipping routes, it basically means that deliveries could take longer. So shippings are taking different routes, some of them going around Africa. And for products that demand fast transition from manufacturer to consumer, they may have to use air travel. So as a result of this, these goods become more expensive. And when the goods or generally the price of goods and services are moving higher, then we basically see there is a high inflation. So the current disruption by the Houthis basically means that there's a good chance that a significant number of industries will be affected by this geopolitical tension. And as a result, we could be seeing products becoming pricier. So at the same time, there's also the issue of scarcity. So if manufacturers cannot deliver products in region, then the remaining products that are available in that market tend to become more scarce and the prices tend to go up. So as a result, we tend to see inflation being on the rise as a result of the disruption currently happening across the Red Sea. Another good question, does the Dow have a direct connection with the DXY? No, there's no direct connection. So the Dow, and for those who are new, the Dow is a benchmark index for the industrial sector in the US. So it basically tracks the top 30 companies in the industrial and banking sector in the US. So when these companies are doing well, then the index does well. So it's used to measure the industry conditions in the US. So when you see these top 30 companies doing well, then you expect the Dow Jones to also be doing well. If they're doing badly, then the Dow Jones is also doing badly. So the dollar index, which is abbreviated as the DXY on the other hand, is a measure of the strength of the dollar. And the strength of the dollar is, in this case, compared with a basket of 6 other currencies. And these includes the Canadian dollar, the euro, the pound, the yen, the Swiss franc, the Swedish krona, and the Australian dollar. So when you see these currencies as a basket strengthening against the dollar, it means that the dollar is really weak. But then when you see the dollar index trading higher, it means that the dollar is pretty strong since it's doing well against the basket of these other currencies. So remember, the currencies don't have an equal weighting. The currency with the highest weighting against the dollar tends to be the euro, since it's shared by 20 different economies, and it's the second currency in terms of global reserve. So in this case, when you see the dollar index being strong, there is absolutely no correlation with the dollar index, the SP 500, or even the NASDAQ. So at some point, these correlations tend to appear in the markets, depending on the market cycle. So for the current cycle dating the last 2 years, we haven't seen a positive correlation. So for instance, last year, the dollar was pretty strong, made significant gains against other currencies. For instance, in Kenya, we started 2023, and Kenya shilling was trading at 123 against the dollar, and we ended at around 158, meaning that the Kenya shilling continued losing to the dollar. So when the dollar was strong against the currencies, also equity markets were pretty positive. And that means that we saw some record gains in the NASDAQ, SP 500, and Dow. But then this doesn't mean that there's a positive correlation, because in other market cycles, there tends to be a negative correlation between the two. So I hope I've answered your questions. Thank you for your insights. This is where I get my fundamentals after doing my technical analysis. Thank you, Vision ICT. So I appreciate you guys. I don't want to bombard you with out of information. I think we have covered the most important part. So a strong inflation may imply a strong Canadian dollar, and a strong Canadian dollar would be easy to trade when you pair it with a weaker currency. And the weaker currency in the market today seems to be the Japanese yen. So also, New Zealand currency, you can see how New Zealand USD has been losing the last 2 days. So you could consider pairing the Canadian dollar with the New Zealand dollar. Of course, the Australian currency has also been weak. So if you look at the last 2 days, there have been a big sell-off of the AUD-USD currency pair. So in this case, as a trader, you could benefit by trading a strong Canadian dollar against any one of these Asian currencies. But then, if the news indicates a weaker inflation, weaker than expected, then that should be weakening for the Canadian dollar. Sorry for that. So then that should be weakening for the Canadian dollar. And if the Canadian dollar is weakening against other currencies, then you want to pair that with a strong currency. So one of the strongest currencies in the market right now is the US dollar. So the only reason you might want to consider trading USD card is in case where the Canadian dollar is weakening. So in that case, we should be expecting to see a continuation of the strong bullish momentum, which is expected to push this pair towards 1.36177. So thank you very much, guys. Thank you for your time. Also, remember to like, share, and subscribe. So main reason I request you guys to subscribe to the channel is that whenever we have a live session, get a notification. In that case, you'll not miss any live sessions happening on this particular channel. So make sure to do that, like the session, share with friends as well as other traders, and most importantly, set those notifications on. So thank you guys. See you on the next session. Remember, it will be happening tomorrow at 11 a.m. Presented by Norbert Kiza from Kampala, Uganda. And of course, it will come loaded with more news, more information about what's currently happening in the markets and the news to expect for the day. So thank you guys, and see you on the next one. A good question here from Samuel. Is it possible that we can take a trade in a session together in a snapshot? This is quite challenging. If you notice, I even use a demo on the presentations because of the regulations we work under the CMA. So if our sessions are deemed anything more than educational, anything more than educational would require a new license, and we don't have that yet. So in this case, it would be into a very bad legal tussle between the company and CMA. So yes, we would really like or want to do that, but unfortunately we can't because of the legal and jurisdiction we live in. So thank you guys. See you on the next one.